All right. So thanks very much for coming. I'll present Protos. So we've been investing in the crypto space for over 5 years, and we've been investing in Bitcoins and Ethereum at the pre-sale levels, Litecoin as well. Before we had a private vehicle because we didn't figure out another way to do it actually. And then that was in 2013. And then last year we actually set up the first cryptocurrency asset management, or we got the first cryptocurrency asset management license in Canada. And we launched a Bitcoin trust, similar to the Grayscale model in the States, but specifically, preferably trading at the NAV, whereas the Grayscale is kind of trading above NAV. And additional to that, so that's only Bitcoins, and we wanted to build a vehicle where you get an on-ramp into crypto, so you will actually get into all the different currencies that are available with just one investment. And actually, so that's why we designed this Protos token, and we have been spending a lot of time on developing this with lawyers and tech people. So let me quickly introduce us. We've been investing in crypto for 13 years combined. We have also built startups and exited 4 with proceeds over 400 million. And we have also managed just regular, normal, traditional hedge funds and prop trading desks with over $2 billion. So who are we? Matthew Shaw is responsible for strategy derivatives. He's co-founded an investment bank and basically traded prop trading desks or managed prop trading desks with over $1 billion. Tom Kinishenko, he's doing our pre-ICO investing and ICO investing. He's overlooking all of that. He's a 2 times VC-backed entrepreneur. And then myself, I'm responsible for all the data and trading part. So we want to base our fund also on systematic strategies and fundamental valuation models. So what is the best way to weight the different crypto tokens? Have a market weighting towards the market capitalization and also to volumes. But also have kind of fundamental trading models. So, for example, what have we experienced, right? We have been here since 2012, 13, just before this peak here. And obviously, back then it was. Looking back now, right? It looks all very simple, right? The best way you should have done it just buy here and then just keep and hold. And especially at this point, where everybody's telling you it's forget about it and it's not going to happen. You just hold, and so that was the tricky part, right? And now it's easy. And now the world has changed. Obviously, everybody got very interested in ICOs and tokens. So there are 200 tokens per week right now. So it's crazy. Then ICOs are at valuations of over $100 million regularly. A startup, right? So it's also valuations are certainly at ICO very, very high. And so I'm coming from a quantitative trading experience, and so basically I just want to give a bit of background on how we would trade these kind of markets. So one strategy that I have applied in other hedge funds and that we've traded in future markets, for example, in equities, is a trend following strategy, and it's a great strategy. It's one of the most successful strategies in hedge funds, and it's also very simple on the other hand. So the strategy works just that if the market is up, you buy it, and if it's down, you sell it. Since shorting Bitcoins and Ether is and all the others obviously as well is very difficult. So we just have made this example here on Hacker Noon, a long only version. So basically the idea is, okay, Bitcoin is up 200%, then you want to participate, the strategy would also participate 200%. So this is kind of back-tested data, right? So you can, and it's very easily replicable. I've detailed all everything you have to do in this Medium post or Hacker Noon post. So the tricky part is here, of course, right? If Bitcoin sells off, and it has done this regularly over 60 days in the past, right? In the old times, and then you want to limit your downside a little bit. So that's what trend following is good at. Because you basically step out at the peak or after the peak, you're basically trying to step out of the market. So that's just one type of strategy that we want to implement, or that we're already implementing, but we want to take this to the fund. The other one is crypto PE ratio. I don't know, has anybody heard about this ratio already? Yeah, a couple of people, hands up. No? Yeah. We really like it. Generally the idea of is Bitcoin price of 7,000, is it high or low, right? is it cheap or is it expensive? And one way to look at it, cheap, yeah. Of course. Well, we think so. We think so. It's probably pretty balanced, right? The question is, how much volume do you have on the chain? Is there? And that's what this ratio does. So network value is basically the market capitalization of Bitcoin. So let's say 100 billion. And transaction volume is like how much volume is actually on the blockchain, on the Bitcoin blockchain. If it's 2 billion, roughly it's 2 billion right now. So here we'd have a ratio of 50. So what is 50? Is 50 as high or low? Turns out 50 is kind of average. So this is this ratio since 2011, 2017. And it's kind of flat or fluctuating around this 50 line. And obviously, if it's cheap, if it's down here like at 30 or something, then Bitcoin would be cheap. Whereas if it's 100, then it's kind of expensive. So, and you can do this for all the other cryptocurrencies as well. And if that holds true, then that would be a very good measure, right? So we definitely want to look at this measure to overweight or underweight cryptocurrencies. For example, Ripple is a very good example, has a high market cap, but almost no volume. So we would downweight that a little bit. Bitcoin is kind of equal weighted. So we believe the current trends are too many tokens, right? It's kind of difficult to look at all of them. So you have to be a wizard, we think, to do it by yourself. I think next year there will be a lot more data to process these ICOs from. Security also will improve because right now you don't have like very good security for, let's say, everything after the top 10 tokens. You'll have to do basically everything by yourself. And then after that, we believe machine learning will come in and multi-manager platforms, so everything that happened to equities will happen as well to crypto. So that's how basically we want to invest the money that you're putting into the tokens, in our tokens. We'll invest along that basically. So first of all, we just invest in core and pre-ICOs at the moment. We'll use the data that we have, so trend following and valuation models. Then next year we'll have better data, so we'll have more algo trading available. And after that, basically, we'll open up our platform to multi-manager, so everybody can participate. So what do I mean with that? So you have a hedge fund. We're doing an ICO, so every dollar into our ICO gets into the hedge fund. The hedge fund has some kind of performance, and it generates fees. And then people can participate in this hedge fund, obviously by staking their own Protos tokens, but they can participate with their own strategy. So maybe somebody wants to trade a venture type of strategy. So he's, or he's an algo trader or discretionary and so on. And this kind of performance gets aggregated into the token again. So yeah, so we created this token. With this token, if you invest in this ICO, then you basically get a stake in the hedge fund. So you get the hedge fund performance. So we're just investing in the whole bunch, top down into the top 30 tokens. Then and it's also liquid because you can exchange the token on the secondary market. How are we different? Obviously a lot of hedge funds are now launching in the crypto space. We think we have three main differentiation points. We are a tradable token. So you buy our token, you can always sell it again. So you don't have no lockups. There's no minimum. We have $1 minimum basically. Then our only goal is to preserve, and grow your capital and our capital, because our capital is there as well. We have 13 years of crypto investing, 50 years of traditional finance investing, and 35 years of tech. We have entrepreneurs in our team. And we think we're way ahead of the key trends of machine learning and multi-manager platforms. We are working with some of the biggest groups in this space. We're working with Argon Group, is our ICO advisor. Skadden is our legal advisor. On a fund level, we have Jules Green, who is here in London, who's co-founder of Ashmore. It's a 50 billion emerging market fund. And on the technical side, we have, just to mention, Fabian Vogelsteller, who is a lead DApp developer at Ethereum Foundation. And also we have Anish, who is the security advisor to Ripple Labs, who is advising us on security, because obviously we have to secure all these different tokens. So as a timeline, we have started pre-sales. On the 9th of October, we're doing the ICO next week, on next Tuesday. So please register at our platform. It's a security token, so there's a bit of a process to get in, but it's basically just your name and password. And then there will be the token distribution probably on the 1st of December. If you want to find out more, you can join our Telegram. Please ask any questions there. Yes, I will take just to mention, website is protos.tokenup.com and email is protos@tokenup.com. So, yeah, that's it.
Thank you.
I think you were first, so... okay.
Who's your ideal client?
Yeah.
And what are some of the challenges you're facing at the moment?
Okay, very good question, yeah. I mean...
Just repeat the question.
So who's our ideal client and what are the problems we are facing, right? So ideal client, I think there are two groups. One group of people has no exposure yet into crypto, so they just want to have something where they're going to buy in and then they get the whole space, kind of the market cap tracking, right? And active management, all that. And that's one group, one big group. And the other big group is people that already have a lot of crypto, like really whales, like really millions of dollars into crypto, and they basically want to have somebody else manage parts of it, right? So they want to pass out that management, but they don't want to go back to fiat, right? Because you don't want to go back to your bank and then you want to transfer it back to somewhere else. But with us, you can just exchange your bitcoins into our token. That's it. So it's straightforward. And the challenges, catch me later. A lot of legal issues, obviously, but we are fully regulated, and you can buy this token from 98 countries. So there's a KYC from 98 countries. Yep. Yeah.
It's not directed directly at yourselves. I just wondered, what is the justification for the 2.5 and 25 structure?
Yeah.
I haven't seen that for 10, 15 years.
I mean, 220 would have been great. Sorry. It's so he's asking why 2.5% management fee and 25% performance fee, which we have, and it's a lot. I agree. And I mean, we had a big argument about it, of course, right? And I mean, I'm coming from hedge funds, and it's 2 and 20, right? I mean, and 1 and 10 maybe, I mean, I was running 1 and 10 structures, and then we had like 220 structures, more complex structures, 2.5, 25. And what's that number, right? It's like make it then 330. I mean, it's a very complicated structure. Right, that's the difference. It's just like if you run a 220 structure in Zcash structure or something that I was running before as well, you can just go to Coil Prime Broker, set it up. It's $100,000. Everybody knows futures. You can just plug into your exchanges and you're going. With this, you can't. Yeah. We have to build everything from scratch. Like top 10, yes, we can do custody, but everything after that is you have to do it by yourself. So it's just a lot more tedious, and that's why I think we can justify the slightly higher fees. That's it. Yeah.
So is the only fee the 220?
2.5, 25, yeah.
225, which is.
But I mean, who's?
225 is not incredibly expensive, not incredibly cheap when it comes to hedge funds.
Yeah.
But how are you? Your typical customer is someone that not necessarily knows a lot about crypto, or someone that may know a little bit but's got a lot of money. How are you guaranteeing them that their funds are safe? Where are you putting this money?
Excellent point, right? I mean, that's what you're paying us for.
Yeah.
I mean, that's at least half of what you're paying us for, securing your crypto, right? Because yes, it's easy to buy your bitcoins on Xapo or Coinbase, and they'll secure your private keys, right? But okay, Ethereum, yes, you can do as well. But after that, it's get really, really, it's get difficult, right? And that's what we are doing for you. That's at least half the story, that we work with people like Fabian and Anish from Ethereum and Ripple to secure your tokens. That's it. Yeah.
Sorry, I don't mean to interrupt you. There's honestly a lot of investing a lot of different coins, yeah?
Yeah.
So we've got Neo, who's got their own particular wallet, We've got Qtum, who've got their own particular wallet. We've got ERC20 tokens, who've got their own particular wallet. If you want a diversified portfolio, where are you storing all of these different tokens?
Well, that's the thing, right? I mean, you have to set up all these different wallets, and you have to set them up as a multi-sig solutions. But I can explain it to you in more detail later, because I mean, this is very, very technical. You have to set up multi-sig solutions for all the different tokens, and these are like.
Is that your service?
That's what we're doing. I mean, for let's say top 10 tokens, we have custody, right? Top 10 tokens will probably get you to 95% market cap, right? fine. So we can have custody with some Swiss banks. They're offering it right now. They take all the risk, solved, right? This last 5%, that's where the hairy stuff comes in. And that's where we have to work with multi-sig solutions. But I'll catch me later, and then we can talk about it. But yeah.
What is your liquidity strategy? Are there any exchanges that have agreed to list your token?
Excellent question. So liquidity, we're getting this question a lot. So we are working with the Argon Group that I mentioned, and they just announced a joint venture between Argon Group, Overstock.com, and TokenHub.com, and they will launch a exchange for security tokens, especially for security tokens, because we are a security token. We are one of the first security tokens. We are fully regulated in the States, and this will be on T0. And the liquidity will come through our performance. So with our performance, from every dollar performance we do, we buy back Protos tokens. So we're destroying Protos tokens with time. The idea is kind of the target is if we triple the money, then we have bought back your original investment. That's the idea. Yep.
Is there any reason why you feel this space particularly is amenable to quant approaches? And I think you mentioned machine learning.
Yeah, it's just great. It's first of all, it's because I'm coming from it. So it's just I love it. But also I think the space is so early, and there are almost no valuation models that you can really scale. So there's a lot of opportunity, right? Because right now there are a lot of day traders, and they are basically just anybody get in, but they don't have any algorithmic trading. There's no proper trading. So there's a lot of arbitrage, right? Basically, in the market, there's a lot of alpha to be gained. So and we want to raise like a 50 million fund. We think with 50 million we can extract a lot of that value.
And you mentioned data in 2018 becoming much better. What did you mean by that?
Yeah, like fundamental data, right? Right now we have price data, we have news, and you have maybe volumes, right, on the exchanges. That's it. With news, with these price and volumes, you can do trend following, you can do market making strategies. Great, but how long is that going to last, right? Maybe a year or so. You can do some arbitrage trading between the different exchanges. Great. But news is good for smaller tokens, because that's also in one of the HackerNoon publications I did, is the news is driving actually the smaller tokens. So the smaller tokens are not actually derived of how much they're used or something. They're really driven by the news. If they pick up news, then they pick up. So you have to do some NLP, natural language processing on Twitter to see if they're picking up. I don't know. Do we have time for? There's a lot of people.
One more question.
One more question. Yeah. So he was the first man, actually. Yeah, exactly. And he was
registered securities in 98 countries.
Yeah. No, it's a registered security in the States.
In the States.
But you can, as an accredited investor, you can invest from 98 countries.
Yeah. So this is accredited investors only.
Yeah.
You said KYC.
Yeah.
You didn't say accredited.
It's both.
You must be accredited to buy this token.
Yes.
And you can only sell it to other accredited investors.
Especially if you're in the States, it's a very tricky. I don't know if you're from the States.
I know the accredited investor.
Yeah, it's a very tricky process. We only allow 99 investors from the States. So please check the offering memorandum. If you're not from the States, it's a lot easier. But if you're from the States and Canada, then there's a process. Like I said, like it's not.
So only wealthy people are able to buy this. This is accredited. Or in the UK, is it accredited for anybody living in Bangladesh? You have to be accredited, or you?
It is. Yeah.
So U.S. standards?
U.S. standards?
No, not U.S. standards. No. It's
UK qualified investors.
Yeah.
And you have a broker dealer here in the UK as well?
No. So we only have in the States.
Yeah.
We're not allowed to publish we cannot sell it anywhere else. We can talk about it in conferences, but it's a U.S. security.
Is this 506C offering?
This is a 9, what is it called?
Reg D?
Yeah, Reg D. Yeah. But catch me later, and I'll walk you through the details. Yeah.
There is more questions.
Okay.
We can have them in the car or in the Thank you very much, Philip.
All right.
Thank you very much.